Hi everyone, welcome to today's Fireside Chat, the Venture Capital Tech-cceleration. Before we begin, I would like to show a disclaimer for the event. And also, before I introduce the speakers, I would like to have a 1-minute elevator pitch of the event organizer, ADDX, a frictionless, fair and safe private markets platform for everyone. So what ADDX does through our mobile app and platform is to connect accredited investors, private banks, external asset managers, and multifamily offices with very attractive and highly established private market opportunities in unicorn, hedge funds, real estate funds, VC funds, and private bonds as well. So the problem that we are solving here is one of access and fractionalization. So we're able to increase access to a wider investor base by lowering investment sizes. In private markets, usually investment sizes range from 200,000 US dollars and above. But because in ADDX, we are able to fractionalize using technology, lowering our investment sizes. And also liquidity, because we have the recognized market operator license to run a secondary market exchange. So unlike private market products where you subscribe for 10 years before you get to see a lot of investment returns, you're able to liquidate part, if not all, of your investment holdings via the secondary market. At ADDX, we are very focused on bringing quality issuances to the investor base at large. So we do so by looking at the top issuers around the region. So examples could be venture capital funds that are returning 5 to 6 times in their first and second round. For Maple Tree Fund, for example, is a private real estate that are previously only available through private banks and to the largest family offices around. And for Astra, as you know, it's a series that is always constantly oversubscribed by the retail and accredited investor base. We continuously want to bring good issuances to the market so that more people get access to private markets, and basically this can help in their private market allocation and increase their investment returns in the long term. So we also launched a mobile app recently, around 2 weeks ago, and we're very excited to have you participate in our mobile app experience. Please scan this QR code and download the app and give us any feedback. Any good feedback is welcome as we improve the app, improving the user experience as you continue to invest with us as well. So before we begin the event proper, there's a Q&A button. You can ask the speakers any questions through this button and we will address them at the end of the session. Yep. So today I'm very excited to present together with 2 highly respectable speakers. I know Charles a while back and Vicknesh as well. And I have gained a lot of respect for what they do in the venture capital scene. Southeast Asia is at a very big inflection point, and they will explain to you why. So I'll start with Charles first. He's the co-founder and managing partner of TNB Aura. Prior to TNB Aura, he founded Capital Associates, a principal investments, early stage and growth equity firm. He also worked as a management consultant at Booz & Company with a key focus on corporate strategy and M&A. Charles served as an entrepreneur in residence at Groupon in Shanghai and previously worked at GSR Ventures in Beijing. As for Vicknesh, he's also a co-founder and managing partner of TNB Aura. So today we have both co-founders with us to present to us how they invest in venture capital. He founded, operated, and exited his real estate fund prior to this of over 350 million. He currently serves as board director and observer at all the TNB Aura portfolio companies, where he advises and assists on their internal strategies and regional expansion plans. Vicknesh is also an appointed judge and mentor for many entrepreneurship workshops, conferences, and startup competitions in the region, cultivating to the startup scene and basically nurturing all the promising entrepreneurs in Southeast Asia. So before I begin, I would like to welcome Vicknesh and Charles.
Hi, Nigel. Thanks a lot for having us. Thank you yourself and ADDX for having us.
Yeah.
Looking forward to a good event.
Yeah, indeed. It's an honor, guys.
Thank you. You both must be very busy. So I will really make the best use of this 1 hour. The first question I have is TMB is a thesis-led high conviction startup focused at Southeast Asia. So can you give us an introduction of what TMB Aura does?
Yeah, I'd be happy to, Nigel. Thanks. So I think it's great to see all the participants. I love the turnout. It's wonderful to see so many different facets of the venture community, startup community, and just interested parties coming to the table today. Please do ask as many questions as you like through this. We'll try and make sure it's as interactive as possible. Thanks again to the ADDX team for putting this all together. So let me start first with, Nigel, your question, right? Being a thesis-led, what does it mean to be a thesis-led, high conviction and value-adding venture capital fund? So let me start with those three principles, as they are very much interrelated with one another. In fact, to us at TMB Aura, this is at its core our flywheel. It's important for me to start with being, let me say, thesis-led. So thesis-led as opposed to being deal-led. Most funds out there today take a deal-led approach to sourcing. We decided to turn that on its head and focus first on developing insights and conviction and thought processes around which specific industries, sectors, and specific business models we think will lead to the future unicorns of Southeast Asia. Secondly, then, is high conviction, and it's interrelated with the first. Once we develop a view, a perspective on a combination of the industry, sector, and business model, we are extreme high conviction investors, i.e. we canvass entire ecosystems, meet as many founders as we can, which are building businesses that will change the world, change the region. And we try and invest only into the best of the best through that process. And then third, value adding, as opposed to being passive. We work very closely, hand in glove, rolled up our sleeves to work with each and every portfolio company that we back. As capital becomes more and more abundant in Southeast Asia and the region today, we know that entrepreneurs and also other investors are looking for venture capital firms to take a lead position, to help drive growth in those companies, and to really add value in each and every way. Overall, we're a data-driven organization. We use data, we're geeks at heart, if you like. We use data from whether it be China, the US, India, and all sorts of other places to try and predict at its core what is likely to succeed in the region. Naturally, it's not a black box. We use a lot of hard work, a lot of elbow grease to work through the data and understand which companies, which business models will likely change the face of their categories across the region. And it's important for us to put a bit of a nod out to Enterprise Singapore as well. We're an approved co-investment partner of them. And we invest at an aggregate across 2 to 10 million into Series A and B startups across the whole of Southeast Asia. Vic, go ahead.
Yeah, so let me just give you some of the numbers on the right? So the TMB Aura was established in 2015. I think the overall venture scene is fairly nascent. So we've been around for a while. We have specifically invested into Series A, B companies, and that's become our niche, right? So we are currently onto our second fund, which is a 100 million fund. Our first fund has been tracking really, really well. It's vintage 2017, that's what we call it in our world, the start date of a fund. And for 2017 vintages across APAC, TMB Aura was benchmarked by Preqin to be one of the top tier funds across Asia, right? This includes China and India in the venture capital category. In terms of distributions back to investors, we have distributed approximately 20% of the fund back to investors within 3 years of the fund life. So it's placing us right at the top of benchmarking in terms of Preqin data across APAC. So every dollar which was previously invested in Fund 1, for example, is now approximately $2.23 in the fund now, right? So where we are now is to actually look at Fund 2 and of course continue our journey and further refine our thesis and just keep going as the way we are going.
Yeah, thanks, Vicknesh. We have seen so much positive news around the startup scene in Southeast Asia. There's so many more unicorns growing, and investors are actually demanding more and more access to startups within the region. So my question here is very fundamental. Why should people consider venture capital as part of an investment for themselves?
Yeah, Nigel, I think a fundamental question to start is it's absolutely perfect, right? As an asset class and as an asset allocator, what you want to be thinking about is how do I get the best risk-adjusted returns. And interestingly, it's been now over 30 years since the data has been collected, venture capital within the alternative investment realm, within the private equity class, has shown to consistently outperform public equities, other types of capital that one can put to work. But as an entire asset, venture capital has other benefits as well as being just, in addition to being risk-adjusted returns higher. The first of these that I like to point out is actually interesting in that sense that people don't often associate it with venture capital, but it's patience and access. As companies spend more and more time private these days, the amount of access that your typical investor gets into we call it the pop, if you like, or the ability for valuations to really accelerate over a short period of time, are being left later and later. So companies are spending more time in the private market, and as a result, the gains that you get, and they're really the disproportionate side of that, early on in a company's life for those really outstanding companies, it is really much more focused into the venture capital scene. The second benefit of putting this within an overall asset allocator's portfolio is correlation. Venture capital and private equities and asset class overall has been shown to be highly uncorrelated with other public markets and other equity stocks. And then finally, number three, and this is perhaps the most dear to my heart and Vicknesh as well, where we see venture capital also having a societal benefit to the region. It's actually, in fact, it's in our name. The next billion, the TNB in our name stands for affecting lives of the next billion. Value creation is something that venture capital is specifically and perfectly suited to build because of our ability to take risk early on into ideas, concepts, founders who are looking to really change the way the world works. That to me, across those four different dimensions, hopefully can give you a bit of a sense for why venture capital, Nigel, is an important part of every asset allocator's basket. So by the numbers you can see on this page, it's easier to see the rising tide of venture capital and the way in which institutions on the left-hand side and on the right-hand side, family offices, have just increasingly allocated to this, becoming an increasing proportion of the total investments going into venture capital overall. Another good example of this is what happened in China. So China is an interesting bellwether of what is likely to happen in Southeast Asia. One of the reasons why we believe this is because if you look at demographic details, China and the golden era specifically of China's VC investing window is starting to happen now here in Southeast Asia. If you look at the left-hand side, and I come back to this point about the maturity, and we'll come back to this a few times today, I think, what's happening in Southeast Asia is a maturing of that venture landscape. In China, this happened, almost 10 years ago now, where you can see back in 2010 through 2012, the vintages of venture portfolios then, so the venture funds that were established during those years, typically returned anywhere between 11 through 13% on an IRR basis. But as you can see, as that blue line grows to the right-hand side, as we went through to 2012 through to 15 and 16, the IRRs for later vintages have continued to accelerate and improve in class. So the question naturally is, why? Why is that the case? If you look to the right, and this is not the full answer, but a good litmus of why that started to happen, it's because of the emergence of unicorn scale businesses in China. If you look on the right, you'll see that 2018, there were 86 unicorns created in China, 45 for the year prior. The other interesting stat here is how long it took for those companies to achieve unicorn status. By the numbers, typically it took about 4 to 5 years to do that. So if you just drag your eyes left of that tall bar in 2018, you'll see that the 2010 through 2014 window was the area in which, if you were a VC fund investing in that period, you had the benefit of macro tailwinds. Unicorns were going to be created in the next 4 to 5 years. And if you started investing selectively in that period, your fund started to do better. Hence what we see on the left-hand side now. That's happening now in Southeast Asia. One of the reasons why we think so is actually the similar trends that we see on the next page, right? So if you don't mind, what's happening here in Southeast Asia is because of, for example, exits, whether SPAC, IPO, or otherwise, we're seeing a return of a few things back into the region. We're seeing a return of capital as people and LPs get their exits. We're seeing a return of founders and executive and experienced management teams. And we're getting a much more robust, mature ecosystem, which can support all of these founding teams. So as you can see on the top right, cumulative unicorns by sector, it wasn't just in China e-commerce that hit. A lot of other industries started growing between the 2014 to 2018 period. And in that period, you can see the growth rate is accelerating across multiple industries because of, for example, the Baidu, Alibaba, Tencent exits, and how that really became a supercharge for the rest of China at that point. Today, that's where we sit with Grab, with SEA, with Goto, and many of the other businesses that are taking the path towards exits as we speak. So Nigel, I think that's a great question. Hopefully I've done justice to it. Sorry, Nigel, you're on mute there.
Those are really good points. I think you raised 3 points: patience and access, your hunger to provide societal benefit, and the macro tailwinds that happened in China 5 years ago are right here now. It seems that Southeast Asia is an emerging powerhouse today. So my question, maybe give some time to Vicknesh now, would be, how do you know that this is the right time? Yeah. What have developed in the past?
So it's a good question, Nigel. So I don't know if we are a powerhouse yet, right? I think there's still quite a bit left to be, proven. But having said that, it is definitely on the right path, right? So if you think about it, before we jump into Southeast Asia and where it is now and it becoming a powerhouse, let's take a look a little bit about Singapore to begin with, because if you look at Singapore, Singapore is a couple of years ahead of Indonesia in terms of government policies, etc. And then after Indonesia, you have Vietnam, where Indonesia is a couple of years ahead of Vietnam. So let's take a look at Singapore, and then you see how Indonesia played out, Vietnam played out, and then where we think they all are now looking forward, right? So looking at some history, right? For example, yes, TMB Aura was established at about 2015, but this market was only really uplifted by some of these government programs in 2012, right? 2010, if you look at the number of VC deals in this market, there were only about 19 VC deals, right? Maybe it's because they didn't categorize it. At that time, it could even be called private equity, it could be called something else, right? But categorized as VC, it was 19 deals. Then you had National Research Foundation in Singapore, which came up with a scheme where if you as a investor, so you could be an incubator, accelerator, etc. If you are going to put 89,000 into a startup, the government is going to give you $500,000, right? So it is an insane scheme, but it was highly, highly effective by the Singapore government, where this scheme allowed approximately 17, 18 different firms to start investing into entrepreneurs, right? So if you think about this just as a concept, the early days from 2012 to 2015, the mode of investment, right, and the kind of investors were highly, highly deal-led, right, if you think about it. So, so as an industry and as a market, overall Southeast Asia, everybody was quite deal-led in early days because by design of the market, right, it's nascent, you can only back entrepreneurs that twinkle in the eye, those guys who you think could be great founders, right? So it's only around 2015-ish, right, where Enterprise Singapore started looking specifically at schemes to uplift the Series A and B areas, right? So for those who are not as familiar, so as a typical investor, you got an angel round, you got a seed round, and these are rounds which are very early, right? So you are backing people on not necessarily revenue growth and other metrics we would look at Series A and B. So Series A and B, you need a lot more data, depth to the market, and sense out of how you want to actually go about investing in it, planning to take them from maybe 1 to 10 or 10 to 100, right? For example, rather than 0 to 1, right? So we were one of those guys approved in 2015, along with some of the latest stage VC guys, right, in the region. And it developed a very different kind of investor, right? So you had investors who were now a lot more sophisticated, a lot larger funds, no longer just investing into early stage companies and just kind of seeding ideas, right? So if you fast forward to now, right, and if you look at Southeast Asia on the whole, right, so you have now Singapore, naturally, majority of the Southeast Asian companies, they put their headquarters here. So you have Singapore, which has very, very good governance. You have very experienced legal teams, and just the infrastructure is way better than what it was about 8 years ago. If you look at Indonesia, Indonesia has very quickly caught up. Naturally, if you look at this chart in front of you, it's from the Google Temasek review, where it's still expected for Southeast Asia on the whole, the internet economy to grow up to 300 billion. This is 3x, right, from where we are right now. And if you look at Indonesia, it has the largest TAM. So as much as Singapore kind of started kicking off this ecosystem, a lot of fund managers started establishing here. You then started having Indonesia catching up, and then Vietnam now is catching up as well. So with a combination of all the macro tailwinds, as well as now, like what Charles mentioned earlier, with more capital coming back and talent coming back with exits into the market, we think that Southeast Asia is going to be incredible. The vintages 2021 funds, 2022 funds are going to be really, really good, because with a combination of more sophisticated founders, sophisticated investors, and even North Asian investors now starting to look at Southeast Asia for bigger alpha, right? It's going to really, really uplift the overall region. So, we are incredibly bullish about Southeast Asia. Hence, we are focused here.
Yeah, nice. This is very exciting.
But this, Nigel will be waiting. Even this chart, right? I wish you guys saw our 2017 pack. There was like 3 different unicorns there. So it's just been, I think every other quarter now, I think you're seeing a unicorn actually coming up.
Yeah. Let's flash the results. Oh, most people say 21 to 30. So a bit less than double. Let's see. Maybe they are correct. Maybe we will hit 51 and above, and 20% will win the grand prize. So we see so many exits starting nowadays, like Grab going for a D-SPAC with Altimeter Capital, C Group going past $100 billion valuation, the merger between Tokopedia and Gojek into Goto, Bukalapak and Traveloka announcing potential plans to IPO. So I'm curious, what's your view? What's your view about the exit scene in Southeast Asia going forward?
Yeah, why don't I take this, Vic? So I think firstly, the two are interrelated, Nigel, and they're highly correlated with one another rather. So unicorns are used as a good bellwether of the possibility of exits, because with scale, you get the ability to leverage public markets, you've got greater attention, you've also conceptually, at least at most of these businesses scale, they should be able to turn profitable and therefore be able to return capital as a profitable enterprise. But first, I think a misnomer that's often used, and people often call it just unicorns, but I think just for the audience's sake today, it's worth just clarifying what that means. I mean, and why we're very specific with how we use the term unicorns here at TNB Aura. One of the easiest ways to create a unicorn conceptually, in the kind of incorrect way of looking at that word, is to start with a $100 million business or a $5 million business and put $1 billion inside of it. Post money of $1 billion, you've got a unicorn. The real true unicorns out there are those that create equity value of over $1 billion. So you take the post money of the last round, you minus all the capital that's been raised to date, and if it's above $1 billion, that's the real value. That's the real generated wealth of the business itself, i.e. not the cash that's gone in. And the reason I caveat that and make that point clear is because a true unicorn is one where you have a business that has started to self-perpetuate, create flywheels, and does all the things which we spoke about earlier in terms of returning benefit back to the ecosystem, whether it be capital, whether it be talent, whether it be just the knowledge, know-how, and the platform value of the organization. Exits is interesting because as unicorns are generated, you get off ramps, like for example, to NASDAQ and NYSE. And I think Southeast Asia as a whole still needs to find its feet. As Vic said, it's not yet the powerhouse that it could be. Find its feet in terms of an exchange that could be an off ramp. Maybe ADDX can help with that, Nigel. But of course, the region, right, overall, we look around the world and we see a lot of other emerging economies, but none quite as interesting as Southeast Asia today. So exits, I think, are not just going to come from, for example, the IPOs. There are many other routes to that. In terms of the question earlier, and let me come back to kind of exits in a second, I think that poll was fascinating in terms of whether it be 20 to 25 or 50 or more. It's, as you said, it's crystal ball gazing. It's difficult to predict, but what one can look at is, if you like, the way in which within the rounds of capital raising, over time, what's coming through the pipe. So just as some stats, as recently as, in 2013, there were only 3 companies in Southeast Asia that had raised Series C+ rounds of capital. Just in 2019 alone, there were 51. In just last year, which was obviously the COVID affected year, there was almost 50. There were 46 companies that raised a Series Plus round. So actually, if you think that the attrition rate from a Series C plus through to the later rounds is typically about 50%, we're probably not far off. We're somewhere between the 30 unicorns created to about 50 unicorns created. But that's just a linear progression. It's entirely possible that what we'll see here will look a lot more like China or the US, where you'll have an acceleration in that. So if we just go to the next page, please, you'll see that the funding amounts last year notwithstanding have continued to grow. In fact, in the second half of last year, we saw, I think, circa another $4 to $6 billion coming into the market. And early quarter this year, 2021, first quarter this year was also an exceptional stellar quarter in terms of fundraising. On the right, you'll see that the predictions for what is likely to happen by the Google and Temasek, same report, in terms of whether it'll be acquisitions, typically 3 off-ramps for exits, acquisitions, M&A, IPO, whether direct or through an IPO itself, front door, or secondaries. I think one of the biggest elements that Southeast Asia is now on the cusp of, from a tailwind perspective, is now visibility on the global stage. 5 years ago, if you went out, and we did, and we spoke to investors all around the world, Southeast Asia just wasn't on the radar. Today, when we go out and we're speaking to investors, we realize that even China and the Chinese funds that have been dedicated towards China are now spending 20% at least looking selectively, opportunistically at Southeast Asia, because they see the same potential that we obviously see here on the ground. We think that's going to be a big push that will help with acquisitions and M&A from the behemoths back in China to secondaries, because with more interest in buying out and coming into companies here, we'll have opportunities as our funds to sell partially into some of those, but obviously trying to hold the most for the upside into a bigger listing. So Nigel, hopefully that gives you a bit of a context to how we think about exits. But hand in glove, we're very much hand on heart, very focused on driving to that very much with each and every portfolio company, and no single company is none of them are all the same, right? We've got to have a tailor-made approach to them all.
Yeah, I think that's a very good insight. You have laid the ground. We are all excited about what's going to happen in Southeast Asia, and we want to choose like a venture capital fund that knows what it's doing, or like people like yourselves who are so deep in terms of your understanding of what's going on. So I'm curious to know next, what is your investment approach at TNB Aura?
So I think this one, Nigel, it's worth, we've got a slide. Yeah, if that can come up, this is great. So I think in principle, and I mentioned this as a quick nod earlier when we started the conversation, we like to think of ourselves as having our own flywheel. And we demarcate those into kind of 4 principles, and I'll just go briefly over these. The first is making an impact. Why is it important to make an impact? It's important because if you're not creating societal significant, groundswell in change, it's really, it's difficult to extract value of that same scale. So making an impact is core to us. The way we ask people to do that, founders do that, when they come to us, to the founders on the call, is show us that the markets they're addressing are above $1 billion, enormous scale, even in Southeast Asia alone. Secondly, show us how you as an organization, your companies can take a material, a significant share of that total addressable market within a relatively short, call it 3 to 5 years. How do you get to $100 million in net revenue? How many rounds do you need to raise? What are the different kind of incidences and points along that journey where you say, look, I come up for air, I need a little bit more capital, and how do you go and build that? And then from our perspective, as purely a fund, we look for each and every portfolio company within ours to be able to return our whole fund. And that's an important metric, and also determines the scale of the opportunities that we back. It's tied to number 2. So as I mentioned earlier, we're a thesis-based sourcing organization. We believe that knowledge is power, in that it's not rocket science to find out which industries and sectors are likely to be the largest ones in Southeast Asia. I mean, anyone can go out and try and Google that sort of thing. But I think the research, the insight, the data that we use goes one step further. We have developed something in association, in partnership with the National University of Singapore here, to develop an approach that predicts what is likely to succeed at a business model level, in effect, to find the diamonds in the rough. Once we do that, we build conviction. As I mentioned earlier, we're a strong, high conviction investor. In other words, when we canvas markets, we try and meet as many founders along in this process as we can. It's important, let me pause for a second. Without number 2 or number 1 and being very selective about where we look, it's impossible to do number 3. We'd have to boil the ocean. to use a consulting speak. It would be impossible for us to meet that many founders within Vic, myself, or even the extended team's time. And then finally, number 4, and this ties the whole thing together, because we target the areas where we can spend enough time. We do the research, the homework, if you like, to have a clear approach and view on each market. And we spend the time getting to know all the founders to predict who we think is going to be the best of the best. We are willing, able, and capable of spending time with each and every portfolio company and not being passive at all. Let me hand over to Vic, because I know we talk about this a lot, in terms of how we think about our approach as being a flywheel. And it really starts with this mentality of prediction, referencing, and learning from other parts of the world, because we don't live in isolation here in Southeast Asia.
Sure. Yeah, let me kind of touch on, Nigel, a little bit more about our approach, right? But before we talk about our approach, it's quite important to understand how everybody generally approaches it. And this includes us, right? It includes us in our early days where we've not done this yet. And, we kind of tried different kind of ways to kind of be as comprehensive as possible with our sourcing. So if you ask any VC guys, how do you source your deals in terms of getting all that deal flow, eventually kind of analyze that deal, and then finally decide, okay, I'm going to be deploying into this company, right? So if you ask them this 3-step process, they would answer pretty similar, right? They would say that, hey, I kind of use my network because I co-invest with the rest of the ecosystem. I kind of work with Enterprise Singapore and other government level entities, or I have analysts who go and run around events and source for deals. And finally, I may be marketing myself online, right? To keep my funnel as wide as open and get all this deal flow. If you ask them, okay, after you get all these deals, let's imagine a good VC looks at 2,000 to 3,000 deals per year. What do you do next? They would then say that, hey, I would look at all precedents. And when we say precedents, it is models which worked in markets which are similar to the demographics of Southeast Asia. So let's imagine China or India, where you look at precedents, where you kind of look whether this model in Indonesia or Vietnam worked in China or created a unicorn there, or did it work in India, for example. So they do a little bit of an analysis on precedents, and only after that, they decide to actually do all the things which you saw on the right earlier, where you look at TAM, you look at team, in any order of preference, right? And you decide to eventually deploy money into it. So what we felt was that it was highly not, the sourcing was never really that comprehensive, purely because you always were missing out on deals, right? Because if you go deal-led, let's imagine last year, there were 40,000 companies which were looking for funding across Southeast Asia. But you, like a good or decent VC, only looks at 2,000 to 3,000 companies per year in terms of your flow. So you may argue that, hey, I'm getting some of the best flow, but still you're not comprehensively looking at the market. Secondly, you are based in Singapore or whichever market that you are in. Some VCs are based in Indonesia. So how do you then be ahead of the curve and make sure you get access to a deal instead of someone in country who just funds the startup, right? And lastly, we know that the best of the best founders out there do not go out to market to fundraise, right? So how do we change this up and kind of look at, like getting involved in a deal way earlier, right? Because the current investors and guys who are closer to a deal will fill the startup. So what we decided to do, Nigel, was instead of going sourcing, look at precedents, and then do all the analysis, we decided, hey, let's flip this around and let's be completely comprehensive. So let's source everything based on the unicorn models. So if you look at the chart in front here, of course, naturally, China and India is actually taken into consideration because of the high correlation score to Indonesia, Vietnam, and Philippines now, right? At least this particular data is about a year old, but Philippines now is coming really quickly up as well. So it kind of shows how Indonesia, Vietnam, and Philippines have some correlation to China and also India, right? So, and then if you go and take a look at the next slide, for example, what we then do is we go into further detail. We look at all the unicorns. So China had produced 293 unicorns over the past 10 years. So why past 10 years? Golden era to VC investing, things which Charles mentioned earlier. So we look at all the unicorns in China, all the unicorns in India, and then we start shortlisting them by industries. right? Just so that we know which are, in Southeast Asia, we always say that opportunities are wide but shallow, right? So you want to find a marketing tech startup, you're going to find it. You want to find any kind of a startup, waste management, IoT, any kind of startup, you can find it. But will that vertical create a unicorn? The reason why we say it's shallow is because under each vertical, actually there's only 20, 30 different companies doing it, right? So we need to find that right stone to turn. So that is why we use these precedences to then look at the top industries, to focus on them, and eventually go down to sectors. So if you look at the middle bit, AI, fintech, it all sounds general, but when we do our analysis, we look at, for example, when we look at educational technology as an example, edtech, we will look at different layers on whether is this sector applicable to Southeast Asia as well as China and India, or is it only unique to China and India, right? That's one layer of analysis. Number two, we even look at under this sector, which are the best performing, under this industry, what are the best performing sectors like K1 to 12, or is it postgraduate education, etc. And finally, we decide out of all these precedences, who had the best business model, right? So that when we then, like Charles mentioned in pillar number 3, when we canvas the markets, we would be able to canvas quite comprehensively and see who has the best business model. In Singapore, however, Nigel, because we're all based here, you don't really look at the precedence model because it's a very different kind of dynamic. It's a different kind of TAM for majority of these industries. So Singapore, in our own geeky way, we try to look at all the 2030 goals where, for example, food and agri-tech, for 30 by 30 for all food to be produced and consumed internally by 2030. So we kind of look at these sectors because we believe that Singapore could produce B2B and deep tech regional winners, right? So that's our thought process and our approach behind things, right? So we try to go thesis lab, where we try to uncover the stones to turn. We then canvas the markets where we meet everybody. And finally, we try to lead a deal, be way involved early days and start and then deploy our funds into these companies.
Yeah. Wow, seems like you have a very good strategy into really canvassing the market, leaving no stone unturned. And there's so many subsectors.
Naturally, Nigel, just to add on as well, be as much as top down and the precedences help 80% of our deals, we do have the typical venture partner network to look at areas like gaming, look at areas which does not have as much precedence, right? So just to kind of like add that on, yeah.
I think I have one more question. There's so many VCs around, right? So what is the differentiator and what are the other VCs doing? What's their strategy?
Sure, Nigel, why don't I think we've got a 2x2 that might help elucidate kind of how everyone else may sit on this map. Now, naturally, every single VC should, we hope, have its own right to win, right to play. But by putting it on this map, hopefully we can sort of create a bit of a framework for evaluating the styles of venture capital funds. I mean, everyone's got a unique style, personality, but these are the broad categories. So the dimensions that we use here, and you'll see some of the same terminology we've used earlier today. On the vertical axis, you'll see a dimension of, for example, whether you're a high conviction, relatively smaller by number portfolio investor, or whether you're a spray and pray, willing to take a huge number of bets and then follow those that come through. On the horizontal axis, you'll see on the left-hand side, a bottoms-up or very deal-led approach to the right-hand side, which is a top-down approach. We use this framework a lot in thinking about, who do we want to work with as well. And to start with, what we really like about Southeast Asia, it is a collaborative ecosystem. Every single one of these 4 quadrants deserves and has a right to win and a right to be around. So let me start with the bottom left, and I'll just go around in sort of a clockwise direction. So the bottom left is where you've got a spray and pray deal-led shop. That's your typical investor who does 50, 100,000, maybe even $500,000 types of checks, but into as many companies as they can. A typical portfolio, for example, 50 or 100 million would be looking at 100 or 100 plus different investee companies. Naturally, within that, the goal as an investor in that quadrant is to see as much as possible. And as Vic and I, we've talked with you about earlier, Nigel, that was appropriate and suitable, particularly early on in Southeast Asia's ecosystems development when it was relatively nascent, and you could spray and pray into the majority of the better quality companies here. As we've talked about, and with the returning of capital and talent back into the ecosystem, we think this particular quadrant, you'll start to see a bit of a bifurcation, and you'll have spray and pray more so in the bottom right-hand corner, where you say a bit more of a top-down approach. I'm going to select in, for example, this country or this industry, and spray and pray across that, because you think that that particular country or industry respectively will have an alpha of its own. And so that's the objective. On the top left, and the third quadrant before I go to the top right, you've got high conviction investors. They spend a lot of time diligencing each and every portfolio company, but underlying it is still a deal-led approach. Now, again, not wrong. In this category, you've got your family offices, your CVCs. In general, they leverage a lot on relationships, on partnerships, and even corporate relationships to get sourcing of companies. But because they're not typically kitted out to do a high velocity of deal flow making, or deal making rather, you end up doing a high conviction kind of approach. So you're betting down into just a few. So typically portfolios here, again, $50 to $100 million portfolio size, you'll have about, call it 15 to 30 investments. The top right is where we sat, and at the risk of rehashing what we've mentioned a couple of times now, there is a flywheel there, which we think is relatively untapped in Southeast Asia, but also partially because of the maturity of the ecosystem has only started to emerge where you can do this now, where there's enough depth in the market so that when you have your thesis-led approach, whether it be country, by sector, by industry, by business model specifically, you can select areas where you want to turn over that stone, to use the analogy that Vic said earlier, and go down deep enough to pick the winners. And over time, that allows you to have comprehensive deal sourcing, to leverage research in adding value to your portfolio companies, and also having a high conviction ability to select better over multiple different rounds. For example, our fund 2, which is a $100 million fund, we're only looking to do about 15 investments. So you can see we're very much in the top there, high conviction. We've still got diversification, of course, but and then in terms of how we select those portfolio companies, are very much a top-down approach. It allows us, both Vic and I, to be really hands-on with each portfolio company, but hopefully that gives you a sense for kind of where everyone else sits on that map.
Yeah, that's a great way to look at it. I think TNB Aura definitely has a distinct strategy going forward, and let's hope that this is favorable given what we have just spoke about in the next 10 years. Yeah, I think this is the last of the slides that you have. If anybody has questions, Vicknesh and Charles are always available for you to reach out to, especially for startup founders who are listening in. Charles has already talked about what they are looking for in terms of their 4-pillar approach. So before I break out into Q&A, I would like to ask one question to Vicknesh and Charles. Maybe Vicknesh can take this question. What keeps both of you up at night? What are your biggest challenges?
Yeah, I tell you, man, I'm looking at these questions and I'm trying my best to answer it, while this is going on. Like, there's some great questions, but what keeps you up at night? It's so interesting because this is a question we ask all our founders. We always ask them, hey guys, what keeps you up at night? And for a lot of founders, it's usually recruitment, for them to hire quick enough, how they execute. For us, it's tough because you see, as a fund manager, you have to juggle this little bit, especially in the early days, while you're fundraising for your fund, as well as you're executing deals, right? And we are in that phase right now, fund 1, fund 2, where you're fundraising while executing deals. So it's a little bit of management that you got to do to ensure that we kind of focus doing both extremely well. So that kind of keeps us up at night. Naturally, we are, we're not technopreneurs who one day woke up to run a fund, so naturally, the top thing in our head is ensuring that we execute exits, right? Because, as a fund, okay, so this is how VC funds work, right? All VC funds are typically 8 years, right? So you need 8 years to technically exit a decent company, but you have 4-year investing period on paper. So we would invest in year 1, 2, 3, and this includes follow on, right? We may put 2 to 3 mil, 5 mil in the first round, go up to 10 into the winners. So our average holding period is 3 to 5 years, right? So as disciplined as we are, that every time a portfolio company hits 3 years, we look at trying to create these exits, right? So naturally, exits is top of our mind. If fund 1 is currently about 3.5 years, So Charles and I are already trying our best to, we have one exit, we have a few more in the pipeline, but we are consistently thinking about that.
Yeah.
So that keeps us up. Yeah.
Charles, what motivated you to be in VC?
Yeah, I saw that question come up, Nigel. I think it's interesting because very few people actually ask us that, right? So me personally, and let me answer it in two parts, like why VC overall and why VC here? Because as you guys can probably tell from my accent, I'm not, I've lived in a number of different places. So firstly, on being a VC, I think of the world in a force multiplier kind of perspective. It's really, terminology wise, what I like is, the leverage component. So what I was trying to figure out early in my career, even back in booze, was where can I have the biggest impact individually, personally? And then how can I build a machinery, an organization around myself to have an even larger impact, and one that, quite honestly, I'll be very, very happy if it does so, can supersede and exceed past my lifetime as well. So what allowed me to really believe that venture capital was the industry for me to spend the rest of my life in was that it is the force multiplier, in my opinion. The ability for us to apply, and in a good way, a pressure point, support, governance, guidance early on enough in an organization's life and a founder's kind of experience and career to be able to help that business grow and really achieve, honestly, sky's the limit here, what the potential of some of these businesses are. That motivated me because it allows us to make fantastic returns, not just for our LPs, but for the ecosystems around the societal gain as well. So that was it for me. And why Southeast Asia? I know not part of the question, but I saw another question earlier, like, what gives us kind of the right to play here? So Southeast Asia is at a once in a lifetime kind of period for many of us who are currently out to invest in the region now, whereby it's got its maturity, but it hasn't yet become a market where the rarefied air is only selected to be the top 3 investors there. We believe, both Vic and I, that today and now is the chance for TMB Aura specifically to create the brand, the reputation, and the track record that will forever be talked about in this region, to be the best of the best and to be able to hold its own against the juggernauts of the rest of the world. Yeah, hopefully, Nigel, that gives you a bit of sense for me. I don't know, Vic, do you have another view on why you wanted to be a VC?
Oh man, I'm typing these answers out.
Oh yeah. So for the benefit of the audience, we will capture all your questions. Yeah.
No, man, there's so many questions here which are really good. So I rather just keep going on the questions.
Sure.
Why I became a VC is because I was a young entrepreneur once, and I felt that I could really set up my cap table much better, and just understanding corporate structures and governance and how to build your company and scale it is a different skill set. And I felt that it's great timing, and I really wanted to value add to the ecosystem. I felt that there was some kind of a skill set we could bring as financial guys rather than the early stage guys who could help companies on a technical perspective. Yeah.
Yeah. So Robin, who I know, he was asking, how do you, TMB, invest together with Enterprise Singapore? What's the process? Yeah.
I'll answer very simply. Enterprise Singapore has a batch of approved co-investment partners. To be honest, this batch is a lot of people now, right? Back in the day, we were maybe the first bunch of people, but now there are some people around, but we continue to be like very close friends with Enterprise Singapore. We love the team there. On a deal by deal basis, we got a green lane because of what we've been allocated. Early in the days, we were given 15 million by the government to do one-to-one matching with them. So if we put $1 in a company, Enterprise Singapore puts $1 in the company, then we have, at any point of the fund life, we have the ability to buy them at 10% simple interest, right? So it's pretty cool because let's imagine I give you some numbers. Imagine we put 1 mil and Enterprise Singapore puts 1 mil in a deal. The company becomes 5x, so the 1 mil becomes 5 mil in 5 years. We just have to pay out Enterprise Singapore 1.5 mil, right? And then there's the ability to take the rest. So it's like debt on the upside, equity on the downside. So it's a great scheme. And Enterprise Singapore, great partners. We love having them on deals. Yeah.
Yeah, that's great. The next question is, so I'm actually answering the questions from the audience because there's just so many. We're trying our best to answer all of them. So I think this one comes from somebody who's an ADDX investor. The person asks, will you encourage your portfolio companies to one day hopefully even raise money on ADDX so that ADDX investors can participate as individuals in their early growth?
Good question, Nigel. And look, as we've also kind of gone on this journey with you guys as an organization, we found it, to be really, high quality, fantastic kind of support throughout the process. I think definitely it holds weight. One thing I would suggest though, and this comes from both experience as well as kind of my personal guidance to those listening. Venture investing is one definitely to be done in a diversified portfolio manner. So if you are going to be investing via ADDX into underlying VC companies, for example, whether it be Series A, B, or even later, always understand that there is that risk, right? If you're not kitted out to manage the portfolios, to be really working hand in hand with them, especially when corporate activities take place, it can be very time consuming and can be very risky. So I would encourage portfolio companies, as always, to use as many points to figure out the lowest cost of capital for them to raise in further growing. But from an ADDX perspective and from an investor on platform, make sure you're doing it with the right kind of mindset.
Yeah, I don't know if I was going to add on. We really don't know the future of how a lot of this fundraising is going to be. Look at the cryptocurrency world, for example, tokenization and issuing out tokens. There is this high possibility that a lot of companies could almost try to go direct down that route, right? Naturally, you have much earlier companies which are not as, I would say, not as proven going into such platforms, but you can never say no. You never know how the future is going to unfold.
Yeah, that's a great perspective. Are there business models in China, like for example, a very successful unicorn in a certain sector, but you don't think it will work well in Southeast Asia?
Yeah, great question, Nigel. I mean, actually, to be honest,
I can do a quick one, right? I'll just do a quick example. So if you look at under the category social commerce, right? Social commerce is, you have different business models. You got Pinduoduo, which is a $150 billion company, and then you have companies like Xiaohongshu, which actually has a platform, right? So, and it's more like a social media platform kind of thing, like Instagram, right? So Xiaohongshu is actually a multi-billion-dollar company in China, but when we looked at social commerce as a category in Southeast Asia, you had companies which was trying to do the Xiaohongshu model, right? But when we analyzed that model, back in the day, China had the Great China Firewall kind of a thing where your Instagram, your Gmail, none of this, I would say, external platforms really worked there, right? I studied part of my MBA there, and I was shocked about how a lot of these stuff was not even working there, right? So the thing is that hence there was this reason for Xiaohongshu to really, really pop up, right, in China. Naturally, in Indonesia and all, you have some of these smaller little platforms coming up. We looked at a lot of them, but we felt that in Southeast Asia, you never really had this problem of the Great China Firewall. People are using platforms like Instagram, Facebook, all of this very well. So the business model of the companies in Southeast Asia trying to copy Xiaohongshu became me enabling Nigel to sell things on YouTube, Instagram, Facebook, right? So when we then started looking at it, we were like, hey, you're not a true end-to-end platform, right? You are an enabler, which makes your margins smaller. It is not as sticky. You become replaceable by YouTube and Instagram themselves, allowing you to sell better on social commerce. So it's just our view, right? When you eventually dive deeper about how that works, yeah.
In your view, how important is it for startups to demonstrate profitability versus continually investing for growth?
I was just typing the answer. I think it's a great question, guys. I love that question. Maybe I'll do this one, right? Quickly.
Go, Vic.
So you see, every round needs to be planned. That's just bottom line, right? So it's not about profitability yet, or it's not about just kind of burning to then scale and grow and stuff like that. So when we get into a round, so a big question we ask entrepreneurs, and this is also correlated to another question out there, which is about how do you pick your companies and stuff. we always try to ask this question, when entrepreneurs come to us, they say, hey, I'm going to do a 2 mil round. And then there's this bit about valuation. And what Charles and I always ask entrepreneurs is, what is your next round going to look like? So what is the milestone you want to hit to then achieve that valuation and that round? So if you say, I want to do 2 mil this round, is your next round going to be 5? And what is the price you're thinking of? And what are you, other than price, what do you think the milestone should be, right? So in early stages, we ensure that you're not overly profitable, but you're burning very accurately, right? And according to business plan. So we even put in things like you cannot deviate more than 20% from your net burn as part of your reporting when we invest, right? So that we keep track on month-to-month basis, right? So I would say it is a precise judgment of when to become profitable and the ability to show future guys that if I want to be profitable, I can switch it on, right? But I now plan to not be profitable so that I can grow, right? So always follow the business plan where you have market comms and you have your clear milestones of what you need to do to go to your next round, right?
Yeah. Nigel, it's actually one of the things which we help startups. So we really do a lot of kind of tic-tacking on this, because it's important for many startups to kind of calibrate to, it's not so much profitability on a net profit level over an aggregate. It's about the contribution margins and the revenue contributions that one kind of a dollar in at the top of the funnel can make at the bottom.
Nice, thank you. Mindful of time, so I will close off with one last question that we'll answer verbally. So this one is, we see that the economy is 300 billion internet economy size in this region. So how would TNB Aura plan to capture or produce the value creation that this region deserves?
I think it helps that we're in the flow, right? As in the 300 billion internet economy is one that's being created now. An interesting kind of, if you double click on that, is unlike other parts of the world where the economy is being shifted from traditional to the new world. So, being internet, for example, or consumer or mobile, for example, Southeast Asia is one where it's being created from scratch. So that in and of itself is a really interesting proposition, because unlike, we ask ourselves this question a lot, are we backing purely disruptors? I think the answer is no. You don't back disruptors if the market is already well mature and established, where you're moving from one pocket to another pocket. But in Southeast Asia, and as some specific businesses, which we happen to take offline and chat with anybody else who's interested, have already shown, is nuanced, localized, hyper-localized approaches to building global style businesses, unicorn scale businesses in Southeast Asia, have been able to create markets as opposed to simply getting part of the internet economy. So I'm very really optimistic about the region and how business models that are being developed here may not just work for this part of the world, but also be looked at as precedents in the future for other elements. And even, would be wonderful to see the US, China, Australia, and other markets look to Southeast Asia and say, oh, that's how they cracked it. That's how you make a really unit profitable, high scalable business. It's from Southeast Asia.
Vicknesh, any closing comments?
No, actually, I think Charles actually covered quite a bit of it. I think that it is a huge TAM, right? So as much as you capture part of the TAM and ensure that you capture the top tier companies by just doing a lot of research and conviction behind it, you would, macro doesn't lie, right? So as long as you're capturing it, and if you go part of that macro, I think we would be able to capture part of that 300 billion kind of economy. But really, it's about capturing those right companies and trends.
Yeah, thank you very much for this 1 hour. Mindful of time, I hope that this venture capital Tech-cceleration event has been insightful for the audience and has sparked some thought. If you are somebody who's interested in the scene, please reach out to any of us. And if you are a startup founder, you know where to look for when you are building a product or service that impacts the next billion. Thank you very much.
Thanks, everybody.
Thanks for having us. Have a good day, guys.